Hi there, you're watching Buy Now Sell Now on ET Now with me Shreyanshi Singh and Cheryl D'Souza, and over the next 1 hour we'll get all of your stock related queries answered from both a technical as well as a fundamental perspective. But well, first things first, we've got to take a look at the markets, and it's quite the sea of red there.
Absolutely, Shreyanshi. A very good morning to you. Happy New Year to you, because we are meeting each other.
And
for the
absolutely welcome back, Cheryl.
So Happy New Year to all of our viewers, because I have not been able to wish you all of you. But yes, if you look at the markets, sea of red, that's exactly how it is looking like at this point in time, because if you look at the Nifty now near the day's lowest point, advanced decline ratio very much tilted in the favor of declines as we speak. Nifty Bank underperforming the benchmark indices with a cut of about 1%. But if you look at Reliance Industries, that is the top gainer on the Nifty despite almost 2% up move coming in for Reliance Industry. You're not seeing that sort of an effect on the Nifty levels. If you didn't have Reliance Industries actually participate, then I believe the index would be at much lower level at this point in time. A couple of brokerage reports actually aiding the move for Reliance Industries. You have Dr. Reddy's, ONGC, BPCL among the other set of gainers, while on the flip side, this trend seeing cuts of about 3%. Shriram Finance is down 2.5%. You have Adani Ports down 2%. Titan, Infosys are the other set of losers in trade today. Let's take a look at what the sectoral indices are looking like at this point in time, because you have only BSE oil and gas sector that's in the positive territory. Otherwise, all the sectors in the negative territory, with the realty index being the top sectoral loser, followed by IT, as well as the broader markets aren't participating at this point in time, Shreyanshi.
Well, absolutely, and that's the market picture and what it is looking like now. But with that, let's kickstart the show and let's kickstart taking all of your stock-related queries. But before we do that, let's take stock of the number that you can write to us at. That will soon be flashing on the top of your screens and on your screens. There you have it. You can write to us with your buy price for the stocks that you're already invested in, and for the stocks that you're planning to invest in, do mention the time horizon that you then have in mind. And on the show today, then we have Kunal Bothra, as well as Shahina Mukadam, who's an independent analyst, joining us as well. Good morning to you. The first query, in fact, before I take the first query, in fact, I just wanted to take your take on the IT space, Kunal. What do you make of the current moves that we've been seeing?
So good morning. First of all, yeah, I think the IT space somehow has been more of a resilient space. The indices and stocks within the IT pack, they've fairly done they've done fairly well for themselves over the last 3 months, 6 months, as well as over the last 2 years. But somehow on the short-term charts, and I'm talking of it from a very recent point of view, that there are evidences that many of these large cap IT names, they are showing some signs of corrective phases. In fact, the IT index for the first time, I think, it's made a bearish head and shoulder pattern. Now that could probably indicate that maybe over the near term you might probably expect that the IT stocks and the IT index could probably go into a mild corrective phase. So I believe that the longer term structure is very strong, extremely positive. You've seen the mid cap IT stocks do fairly well for themselves, but it's just that the near term structure for many of these IT stocks, larger cap names, as well as the IT index as such, is showing some signs of sluggishness. So maybe from a short term view, you might probably expect these indices to correct by a margin of another 2 to 5% at least over the very short term.
Alright, so that's a short-term view coming in for the IT index. Very good morning to you, Kunal. Good morning to you as well, Shahina. I just want your quick take coming in for the IT space and what you're actually penciling in, because you will have all the numbers trickling in very, very soon. So what's your take for the IT index?
Well, I think the growth is expected to be extremely subdued on a CC level. For the full year, we're expecting the growth to be maintained around 8 to 10% in the higher single digit for overall average IT companies. This quarter we are not expecting too much in terms of actual numbers, but there are certain positives that we can look forward to in terms of the commentary of the managements going forward, because as you know, interest rates in US are coming off, and IT spends are likely to increase given the fact that with the new Trump administration, there could be more money in the hands of large corporates to invest in actually their systems. So to that extent, I think both services, IT services, as well as other research-based, smaller mid-cap IT companies should do well over the longer term. So I would think this is a consolidation phase. The IT sector has done pretty well if you see the last quarter in terms of stock performance. So we are seeing a bit of corrective move. And I think that could continue on for maybe the next month or two.
And so that's a take coming in as far as the IT sector is concerned. But let's kickstart the show by taking a query on on one particular stock from within the space. Then, Kunal, the first one that we have is coming in from NSS Lakshmi, writing to us from Vijayawada, asking about Coforge, 55 shares at par on 2002 year. Again, she wants to know what you make of this particular counter. Should she be waiting for a correction, or what should she do with regard to Coforge then?
See, I think it's been one of the more fantastic stocks from the IT space. And I think if I'm not wrong, Coforge over the last 1.5 odd year has moved from a level of 4,500, 5,000-ish levels to almost 10,000 mark. Now, as I was pointing out earlier, that I'm expecting that many of these larger cap IT names or the IT index overall could probably get into a corrective phase. So I think if that happens for a stock like Coforge, you might probably expect that from a short-term view, this stock may also get into a correction. But the concern is that if in case the correction steepens for many of these IT stocks, then you might probably expect a much more sharper mean reversion for a stock like Coforge. So the best strategy over here is to wait out for a point when the stock at least retests its 50-day moving average. Currently that level is around 8,800 to 9,000 levels, 9,200 for Coforge. That could be a first zone where you may look to start buying and then assess the market conditions as well as the conditions for the IT index if in case you have to add further.
Right, the next one is coming from Nikhil. He's writing to us from Mumbai, and China, he wants to know about hotel sector or hospitality sector as a whole, because he's of the view that during the wedding season, or rather everyone is of the view during the wedding season, you see a sharp bump up when you talk about the operations or the revenues of these sort of companies. So he wants to know, keeping that sort of theme in mind, should he look at a hospitality stock right now for this entire year?
I think hospitality will do well because we've seen the rupee depreciating. And while there has been some softness in certain areas like say Goa and some other areas, but I think overall the stocks are likely to do well over the medium to longer term. Of course, we have Indian Hotels, which is the largest. It is the most expensive, but in terms of growth, it remains pretty robust. Another one is the hotel stock of ITC hotels that will list in February, mid-February. I think that would be worth looking at if you're looking at the medium to longer term. And of course, in the smaller ones, you have something like a Lemon Tree, which actually is showing growth. It's showing a bit of turnaround. So you have a number of hotel stocks which you can look into, make a portfolio and hold it for the very long term.
A lot of stocks to cherry pick from when it comes to the hotel space. Then, Kunal, do you have anything to add when it comes to this?
From the hotel stocks, I think Indian Hotels, of course, is one of the standout performers. But there are two stocks which have started to come back into a breakout mode very recently. One of them is, of course, Chalet Hotels, and the other is Lemon Tree Hotels. I think both of these stocks, they've started to show some signs of an up move, uptrend. They've been a lot more consistent in the last 2-3 months, and especially at a time when the markets were a lot more negative or on the bearish side over the last 3 odd months. That was a point where these stocks managed to first absorb the corrective phase and then come back into a breakout mode. So I believe that those are the other two options which you can go for.
All right, that's the take coming in the hospitality space, the travel sector. I hope that answers your query as well, Radhika. Let me move on. Then the next query, this one is coming from Bala. He's writing to us from Coimbatore. Kunal, coming to you because he wants to look at CESC. He's looking at this for a fresh entry. He wants to know, is this the right time to go ahead and enter CESC, or should he look at some other stock for a period of about 2 years or so?
So I think wait out for some more time, for CESC. So again, it's been a very strong stock. I remember I think tracking, CESC when the stock was just about closer to 100, 110 odd rupees towards the point when the stock managed to give a breakout about 200 levels. But it's just that on the short-term charts, the stock is coming closer to its 200-day moving average, break. So if in case, say over the next 1 week, the stock falls below its 200 DMA, which currently is placed at 169, which means just about some 2-3 percentage points away from the current market price, then you might probably expect that the correction could steepen into the stock price. So that's how I would suggest a wait and watch. In case, say over the next 1 or 2 weeks, the stock falls below its 200 DMA, then you might probably expect the stock to say correct towards 155, 150 levels thereabout. That could be a very good entry point for you if you're a long-term investor. And in case if the stock doesn't break below its 200-day moving average and say just about floats around this 170 mark plus minus, a few percentage points, then also I think that could be a good buying territory for you for CESC for a long-term play.
And there you have it. So those are the entry levels to look at when it comes to CESC. Shahina, I'm going to come right back to you because Vignesh is writing to us from Bengaluru. Wants to know about the 500 shares of Samvardhana Motherson that he's holding on to. And his buy price was in fact 156. So should he add more at the current price? What do you make of this one?
I think you should wait for a bit of dip to actually add from here on. Probably he should look at something like 135, 130. See, basically, while the sector is coming back, auto anks is coming back into favor, given the fact that even autos is coming back. I do believe that, with the US market, the tariffs still uncertain, and Motherson, of course, has huge exposure to the international markets. I think it would be better to wait and buy it at dips closer to maybe 135.
That's the take coming in on SAMIL, but on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, more stock queries to be answered. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and on to the latest news flow on the Adani Group. The US Republican Congressman Lance Godin has actually written a strongly worded letter to the Attorney General questioning the indictment of Gautam Adani in the alleged bribe case, calling it a selective action which risks damaging Washington's alliance with India. In the letter, Godin has actually demanded answers on selective prosecution and asked if there was any George Soros connection to the probe. Further, he asked the Department of Justice to focus on activities in the United States rather than chasing rumors abroad. Among the many important questions listed in the letter, Godin has asked if any American citizen was indicted in the matter given the involvement of the nexus with the United States. Additionally, he has also asked if the larger purpose of the indictment is to enforce justice in India. More importantly, questions were also posted on whether there is a plan in place if India refuses to comply with the said request. Gauging from the overall mood in the letter, the larger question remains whether the Biden administration is in fact ready to escalate the issue into an international incident between the United States and its long-standing politically ally.
Well, absolutely. And with that, let's also take the rest of the queries that are still pouring in. The next one that we in fact have is coming in on Cochin Shipyard, coming in from Ellen Iyer, Kunal, and he wants to know about Cochin Shipyard because he's holding on to 28% losses in terms of Cochin Shipyard. Then what do you make of this one then?
Yeah, it's been, of course, the last 6-8 months, 9 months have been a lot more torrid for Cochin Shipyard and many of these other related space names. Even Cochin Shipyard, I think, has corrected more than 50% from a high around 3,000 levels, 2,900 mark. The stock at one point had corrected towards 1,300 mark. So it's a decent, 50% to 60% correction the stock has seen over the last, few, months. But the concern is that the stock is still reeling below its 200 moving average. The volumes have dipped down, which means what could ideally happen is that the stock may get into a time-wise correction. So I think if you're a long-term investor, since you purchased at higher price, my suggestion would be that say closer to 1300 levels, 1300, 1400 zone, in case if the stock happens to enter into this territory, that could be a point where you may look to average further so that you can bring your cost price lower. And you have to look out for holding the stock for at least another 1 to 2 years to get back into a some sort of a uptrending mode. So as of now, expecting the stock to get into a time-wise correction, 1300 to 1400 could be a good zone where you can look to average.
All right, so that's about Cochin Shipyard. In fact, even you had Padma who's written to us about it, wanted to know whether it makes sense to buy Cochin Shipyard, NMDC or Hindustan Zinc for the shorter term. Kunal, I'll come back to you for this one also.
Cochin Shipyard,
NMDC and Hindustan Zinc.
So again, I think NMDC, Hindustan Zinc, both of these stocks, they had their fair share of a major uptrend in 2022-23. NMDC, I think, has now come back towards 65, 67 mark. X of NMDC steel, and even Hindustan Zinc, which I think had moved towards 750, 800 levels, has come back to 430, 440 mark. So I think at current levels, you might start to look to start investing into these names on a staggered basis. But then because of the way the markets are poised, I would probably expect that a buy on dips or a staggered approach could be a better strategy for these stocks. So you may start buying, say, 1/3 of your expected quantity at current levels, and at every 10% dip or a correction to these stocks from current levels is very quick to average further.
All right, and that's a take coming in as far as NMDC also is concerned. Shahina, I'm going to come right back to you about Sona BLW because we do have Vinita writing to us from Mumbai. is holding on to 500 shares, in fact, at a buy price of 650, and she's invested for the long term. But what can she do with this current holding then?
Well, I think, the stock is looking slightly weak for the shorter term, but I think in terms of fundamentals, balance sheet is strong. So in the medium to longer term, I think there is going to be a good bounce from here. So she can continue to hold, in my view. Numbers also expected to be better than what we have seen in the last couple of in the last quarter. So I would say you can hold.
All right, so that's the take coming in on Sona BLW. We have a query that is coming for a viewer on Sun Pharma actually. And the viewer is Ignatius. He wants to know about Sun Pharma. 50 shares he's holding at a price of around 650.96 odd rupees. Kunal, he's been holding on for the last 1 year. Now he wants to know whether he should hold on for the next 1 more year or look to book profit. What sort of a strategy?
See, again, I think congratulations, because you've earned fantastic returns onto the stock price, holding on to the stock at the worst point of the time when the stock had literally been down and out. But then I think right now what you're seeing is two-faced. One is that the markets have been very volatile, and typically defensive sectors like pharma, they tend to do pretty well for themselves in this kind of a churn of market volatility. So I would suggest that you can probably hold on to Sun Pharma as of now, but then try and trail your stop losses higher as much as possible. So I think at current levels of 1843 thereabouts, you may probably expect that 1800 on closing basis could be a good trailing stop loss, so that you can continue to hold on.
Rather than the next one that we have is coming in from Karishma from Delhi, Shahina, and she's writing to us about GMR Airports. 2,000 shares at a buy price of 82 rupees. What do you make of this one? Because in the last 3 months, this stock has actually fared very poorly.
Yeah, actually, even as of now, I believe it's still in a corrective phase. After that nice big rally that we saw some time back, I think the stock is correcting. I would say that you can sort of hold if you're holding it, but you may see slightly lower levels. And if you want to add, then it's better to add it at much lower levels. I would say somewhere close to about 65 would be some level where you could see it bottoming it out.
That's the take coming in on GMR Airports. We have the next query that is coming in from Amarnath. He wants to know about JSW Energy, Kunal. He's writing to us from Bangalore. Is it a good time to go ahead and buy this particular counter?
Not really. In fact, it's just very recently the stock has started to get back into a sharp corrective phase. The last I think 2-3 weeks or so, the stock has fallen from 660 levels to 570, 580, where it's trading right now. It's fallen below its 200 DMA. The volumes have been much on the higher side, and especially on the break of this 200 DMA for JSW Energy, which means we could be looking at a potential downtrend further for the stock even from current levels. So I would probably suggest that keep a range, say closer to 525, 530 as a starting point if you're looking to buy JSW Energy from a swing trade or even from a positional play.
Alright, then the next one that we in fact have is coming in from Minakshi, writing to us from Hyderabad, Kunal. I'm going to come right back to you for this one, because ACC 2000 call option at a buy price of 84 rupees is what Minakshi is looking at and wants your take on. What do you make of this one then?
See, as of now, ACC still seems to be a relatively low to moderate beta kind of a chart. Now, the last 3 day back, the stock made a swing low around 1980-85 levels. Currently, it's holding at 2019-2020 mark. So, which means that potentially there could be a chance that the stock may try and show some bit of more resilience and make a comeback again. I think if I'm not wrong, the call option price is now placed at 70-75 kind of a range. I would suggest to hold on to the option as of now. Either you can keep a stop loss on the price front, on the cash front at 1980. So in case of the stock breaks below the 1980 mark, that's where you can look to exit the call option. Or else, if you're looking at this as an option play specifically, then I think keep a stop loss just around that 58 mark on this call option.
Right. So that's the take coming in on ACC call option. Let me come to you, Shahina, and this one is coming in from our viewer, that is Arvind. He's writing to us from Kerala, and he wants one bank suggestion from you from the large, the mid cap and the small cap for the next 5 to 10 years that he can look to place his bets on.
Banks, I think you're asking. Yeah.
One from the large cap, one from the mid cap, and one from the small cap.
Okay. So in the large cap banks, of course, it's ICICI Bank, my top pick, followed by HDFC Bank. I think these two, of course, there's a no-brainer. In the mid cap and small cap space, you can look at something like a Federal Bank. I think Federal Bank looks interesting from the medium term in terms of performance. Also has done well. You can look at something like uh, another bank in the small cap space. You can look at something like Canara Bank, mid cap space, PSU. So I think I will limit to these four banks.
The banking counters that Shahina then is looking at from each of those categories. But time for a very quick breather on the show. When we come back, we'll continue answering all of your stock related queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and it's time to take all of your stock related queries. Now, the next one that we have, Kunal, is coming in from Jay Krishnan, writing to us from Kerala. Wants to know about M&M. Do you see any entry points in mind? He's looking to invest for the medium term.
Well, I think at current levels, you can look to start, accumulating M&M. So, we were discussing this in the morning that how M&M has been one of the standout performers over the last 2.5 odd years. And even at current levels, at a point when many of these auto stocks and the auto index, they are almost at 52-week lows, you have hardly few stocks from the large cap auto stocks which have performed exceptionally well. M&M is of course one of the strongest stock on a relative basis. So I would believe that the stock price chart looks attractive, and looking at the current structure of the charts, the relative strength, the outperformance, as well as the stability the stock has shown over the last few weeks and months of this market volatility, I think that could probably be one of the major reasons why traders could look at a buy in M&M even at current levels.
This one's come from Balakrishnan. This one is for you, Shahina. He's writing to us from Chennai. And he's saying that is it advisable to continue to hold on to Asian Paints? He's been holding it for the last 3 years or so, or over 3 years or so. So his buy price is about 1,600 rupees per share. The stock has been under pressure of late. What's your take on this one? Should he stay put with Asian Paints or look to actually go ahead and accumulate some BEL at this price point?
I would prefer BEL at this price point compared to Asian Paints because of the overall softness in the industry. At the same time, I would say it seems to be bottoming out. But you could also see prices of 2001. BEL looks better at current levels. Also, I want to just add to the previous question on banks, small cap banks. I don't think I did justice to it. I think there are two interesting small cap banks, DCB Bank, actually where the valuations are just about 0.7 price to book. And you could also look at City Union, where, these banks you can add at dips because the overall market is giving you those corrections. You can add them for the medium to longer term. City Union is available at 1.4 times, so you can actually add it at dips.
That's the take coming as far as the banking counters then are concerned. In fact, let's keep it going with that back, Kunal. And the next one that we have is coming in for you. Coming in from R. Ganesh, writing to us from Bengaluru, wants to know about a couple of counters that he wants to invest in for a period of about 5 years thereabout. IndusInd Bank and IDFC First Bank are the ones that make it to his list. So what do you think of these?
See, I think now I understand that both these stocks have gone through one of the worst phases over the last few quarters or over the last 2 to 3 years. But then I think somehow it looks like the risk reward is starting to look a lot more attractive. Now, of course, not from a trading play, but more from a longer term play. Because right now we are at a point where, for example, IndusInd Bank, the stock which is sub the 1,000 levels, you have the 200 moving average, which is almost like a 25 to 40% divergence on the upside for IndusInd Bank. So the stock is almost down by a margin of 25-30% plus from its long-term moving averages. Those are steep divergences, and that generally indicates that the stock eventually comes back into an oversold territory. Even on the front for IDFC First Bank, the stock I think managed to rise towards 100 plus mark a couple of years back, and from there the stock has corrected by a margin of 30-35%. So I would believe that from a long-term play, this could actually be a very good territory to try and buy these stocks and look to accumulate. But your the biggest caveat over here is that your time frame has to be long-term, which means at least 2 to 3 years plus is what I would expect.
All right, moving on then. This next query that I have is coming from Alex. He's writing to us from Tamil Nadu, and he has about 300 shares of Tata Tech at an average price of 988 rupees per share, Shahina. He is incurring a heavy loss on this counter. Not that heavy, but yes, he is in a sizable loss. So he wants to know what should he do? Stay put with this, be patient with Tata Tech, or look to exit?
Say that it is one of the better quality stocks in terms of the product portfolio. in the tech space. I would say you can continue to hold. The stock has not really performed from listing. You can continue to hold, keep a stop loss close to about 825, and then you could probably look at targets close to about 1000. But the overall tech sector is being a bit soft as of now. So you could see this being in a corrective phase for some more time.
Alright, then that's the take coming in. As far as Tata Tech then is concerned, Kunal, I'm going to come back to you because we do have Vivek writing to us about Action Construction at a buy price of 700 rupees. Can hold on for 3 to 6 months, but what do you make of this counter?
I think it's a fantastic chart. I've tracked the stock for the last few years, especially at a point when the stock was almost at 185 to 280 kind of levels. So it's done reasonably well for itself. Now of course you've also earned handsome returns on your investments over here. So on the longer term wise, I would suggest a hold on ACE or Action Construction. But from a short term wise, it looks like the stock is going through a time wise consolidation or a time wise correction. So you may have to be a bit more patient over here. Since you've purchased at much lower levels, I would suggest a hold as well as a possible accumulation further in case if the stock dips down to say closer to 1200 or 1250 odd mark.
All right, so that is the take coming in on ACE. The next one that I have is coming for you, Kunal, and this one is coming in from Rajendra, writing to us from Bangalore, and he has about 100 shares of Vedanta, which he's purchased at levels of 477 rupees per share. He wants to know whether he should wait for the short term or look to exit, and if exit, then which stock should he look at?
See, it's been a tricky stock, undoubtedly Vedanta. In fact, the entire sector has been a lot more wobbly. You've seen metal counters going into a sudden rally and then a very sharp correction. So that's the only concern for a stock like Vedanta, because it falls into that kind of a sector which has become extremely high beta and volatile. Just on a basis of technical front, I would believe that 420, 440 is a huge support for the stock on the longer term charts. In fact, over the last 1 to 2 years, the stock has been holding on to this 420, 440 band, and major corrections have been absorbed at those levels. So that's where I would probably place the charts for Vedanta. In case if you're looking to take that high risk bet, then I think that's a zone where you can look to accumulate or add further.
Alright, and those were all the queries that we could then pack for you on this edition of Buy Now, Sell Now on ET Now. Thanks Kunal as well as Shahina for joining us. But with that, completely timed out on this segment. On the other side, we have a special segment for you, so stay tuned.
If you like this video, then like, share and subscribe to ET Now.